Tarina.
Acne really felt like my lot in life. I've tried Proactive, I've tried Murad, I tried special face cleansing brushes, pills, and cream.
Why the U.S. Isn't doing that? Is there disagreement among allies regarding SWIFT and whether Russia should be allowed to be a part of it?
The sanctions that we proposed on all their banks are of equal consequence, maybe more consequence than SWIFT, number one. Number two, it is always an option, but right now that's not the position that the rest of Europe wishes to take. Cecilia Vega, ABC.
Sir, sanctions clearly have not been enough to deter Vladimir Putin to this point. What is going to stop him? How and when does this end? And do you see him trying to go beyond Ukraine? And a second question I'll just give to you now. This statement that he gave last night, the threat that he gave, the West will face consequences greater than any you have faced in history. Is he threatening a nuclear strike?
I have no idea what he's threatening. I know what he has done, number one. And number two, no one expected the sanctions to prevent anything from happening. It has to show, this is going to take time, and we have to show resolve so he knows what's coming. And so the people of Russia know what he's brought on them. That's what this is all about. This is going to take time. It's not going to occur. He's going to say, oh my God, these sanctions are coming, I'm going to stand down. He's going to test the resolve of the West to see if we stay together, and we will. We will, and it will impose significant costs on him.
Will he go beyond Ukraine, sir? Do you see him going?
Yes.
Thank you. Two topics, just really quick. First, markets are down and gas prices are up. I know you always stress the difference between Wall Street and Main Street, but everybody seems to be in for some economic pain. How economically painful is it going to get for people in this country? And I do have one more question.
First of all, there's no doubt that when a major nuclear power attacks and invades another country, that the world is going to respond, and markets can respond all over the world. So there's no doubt about that, number one. Number two, the notion that this is going to last for a long time is highly unlikely. As long as we continue to stay resolved in imposing the sanctions we're going to impose on Russia, period. What's the next question? I'm sorry.
The next question is, did you underestimate Putin, and would you still describe him the way that you did in the summer as a worthy adversary?
At the time, he was, I made it clear, as an adversary, and I said he was worthy. I didn't underestimate him. And I've read most of everything he's written. Did you read? I'm not a wise guy. You heard the speech he made, almost an hour's worth of speeches, why he was going into Ukraine. He has much larger ambitions in Ukraine. He wants to, in fact, reestablish the former Soviet Union. That's what this is about. And I think that his ambitions are completely contrary to the place where the rest of the world has arrived.
And with that, with his ambitions, you're confident that these devastating sanctions are going to be as devastating as Russians and bullets and tanks?
Yes, Russian bullets, missiles, and tanks in Ukraine. Yes, I am.
Thank you, President Biden. If sanctions cannot stop President Putin, what penalty can?
I didn't say sanctions couldn't stop him.
You've been talking about the threat of these sanctions for several weeks now.
Yes, but the threat of the sanctions and imposing the sanctions and seeing the effect of the sanctions are two different things. They're two different things. And he's going to begin to see the effect of the sanctions.
And what will that do? How will that change his mindset here, given he's
because
attacking
it will so
Ukraine
weaken his country that he'll have to make a very, very difficult choice as to whether to continue to move toward being a second-rate power or, in fact, respond.
You said in recent weeks that big nations cannot bluff when it comes to something like this. You recently said that the idea of personally sanctioning President Putin was on the table. Is that a step that you're prepared to take? And if not...
It's not a bluff, it's on the table.
Sanctioning President Putin?
Yes.
Why not sanction him today, sir?
Mr. President?
Why not sanction him today, sir?
Mr. President, if I can, you detailed some severe and swift new sanctions today and said the impact it will have over time. But given the full-scale invasion, given that you're not pursuing disconnecting Russia from what's called SWIFT, the international banking system, or other sanctions at your disposal, respectfully, sir, what more are you waiting for?
Specifically, with the sanctions we've imposed exceed SWIFT. The sanctions we imposed exceed anything that's ever been done. The sanctions we imposed have generated 2/3 of the world joining us. They are profound sanctions. Let's have a conversation in another month or so to see if they're working. Yes.
Can I ask you about Zelensky? Sir, you spoke to Vladimir Zelensky yesterday, sir.
What's the risk that we are watching the beginning of another Cold War, and is there now a complete rupture in U.S. and Russian relations?
There is a complete rupture right now in U.S.-Russian relations if they continue on this path that they're on. And in terms of a Cold War, that depends. You have the vast majority of the rest of the world in total opposition to what he's doing, from Asia to South America to Europe to around the world. And so it's going to be a cold day for Russia. The idea, you don't see a whole lot of people coming to his defense.
And are you, if I could follow up, sir, are you urging China to help isolate Russia? Are you urging China to help isolate Russia?
I'm not prepared to comment on that at the moment. No. Yeah. No. He's had his hand up a long time.
Thank you, Mr. President. How concerned are you that Putin wants to go beyond Ukraine into other countries, and the U.S. will have to get involved if he moves into NATO countries?
Well, if he did move into NATO countries, he will be involved. We will be involved. The only thing that I'm convinced of is if we don't stop now, he'll be emboldened. If we don't move against him now with these significant sanctions, he will be emboldened. Look, well, anyway.
Can you talk anything more about your conversation? Mr. President.
Why not sanction Putin directly today?
I'm sorry, I can't hear you.
Sir, India, which is a major defense partner of the United States, is India fully with you on the issue of Ukraine and Russia?
Does the Defense Department of the United States...
Sir, India is one of your major defense partners. Is India fully in sync with the United States on Russia?
We're in consultation with India today. We haven't resolved that completely.
One more question.
Okay, thank you all very much. Thank you.
The financial impact, sir. Are you sanctioning President Putin?
All right, folks, of course,
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. A very busy Thursday and a volatile market day as well. It is Thursday, February 24th, 2022. Tim Stenovic is off. Paul Sweeney, co-host of Bloomberg Surveillance and Bloomberg Markets on Bloomberg Radio, is joining me in studio. And we are live, of course, on YouTube and, of course, here in our Interactive Brokers studio. It's a tricky one.
It's a tricky one. I mean, we started the year 2022 seeing a lot of volatility in this market, spiking inflation, investors trying to get a handle on how this year will unfold economically. And then you add into that the geopolitical risk here that we're seeing in real time here today. It's something else for this market to digest. It's something else for a lot of these fund managers and analysts to kind of figure out, how do I put that risk into my equation?
Yeah, and exactly. And on a day when we're hearing from a lot of Fed speakers who are being like, listen, we're still on track. We got to do something at that March meeting, but we're keeping an eye on this.
That's right. And it's always the Fed. And that has been one of the key issues here. So it's good to get some color from them as well.
All right. Well, a warm welcome to all of our listeners and viewers on YouTube. Of course, as we said, there is one story for us, and that is the Russian invasion into Ukraine and the reaction in the financial markets. But it's also a personal story. We are going to cover it over the next 3 hours. With that in mind, let's set the Business Week agenda on this Thursday. And joining us to do that is Kriti Gupta, markets correspondent at Bloomberg, here in our Interactive Brokers studio, as is Michael McKee, international economics and policy correspondent at Bloomberg News. Mike, I do want to start with you. I feel like you and I have been together here at Bloomberg for a long time.
Many invasions, yeah.
Yes. Many invasions, many stress points, 9/11, you think about it, and like, how do you put this into context?
Well, this is obviously one of the worst things that has happened since World War II. We don't yet know the spillover effects, but I would say the last time we saw anything like this was 9/11 and the subsequent invasions of Afghanistan and Iraq. At this point, because we don't know how long this is going to last, and because we don't know how Russia is going to react to the sanctions that are just being announced, it's hard to say what the long-term or even medium-term impact of it is, other than we're going to see higher inflation from higher energy prices. But right now we have to wait and see over the next 48 to 32 hours to see how this develops.
But it's not a game of chicken anymore because things are
No,
happening.
it's real. Yep. This is real, and people have to react to it. And the problem, obviously, that we have, and certainly for investors, is you don't know what's happening. It's the fog of war, and we could find out something completely different in a little while, and that changes your calculations. So it's kind of best, and I was talking with Paul this morning. We were saying you look at the drop in the markets, and it's probably less about people saying, I want to sell because I'm going to lose money on this or that company. It's like, I don't know what I want to buy. Right. So I'm going to just raise some cash, and I'm going to sit there and figure out.
Yeah, it's interesting, Crude. We had this. This is a market that's had a lot of volatility. I'm looking at the VIX right now, just south of 33. And so we had the news cross this morning, and when markets were opening, a lot of volatility in the equity markets. We've actually got NASDAQ up, but the S&P down. A lot of gyrations. I guess that should not be a surprise.
A lot of gyrations, but take a look at what they're actually buying. If you look at some of these stocks, I mean, you have things ranging from Yandex, which, by the way, I just discovered was a Russian company. Okay. Yandex, which is down like 50% or something. And then you kind of compare that to cybersecurity stocks, which are up 9, 10% today. So those are kind of trades that you're making here, right? What stocks are going to be defensive? What stocks are going to give you less exposure to that region? And that's really what's kind of pushing the NASDAQ higher right now. What's also interesting is that technicals do play a role here. You did have the NASDAQ hit 20% and then kind of bounce back from that. The S&P 500 following the NASDAQ.
Is that the first time we know? Have we already officially seen the NASDAQ go down 20%? Or that? No, this was a new technical low here.
I believe it has hit 20%. I will quickly double check that for you as we're discussing this. But I think to your point, Paul, the volatility is really the key piece of it because, as Mike said, no one knows what's happening. And I think the key headline here in the press conference that you actually just heard was that he has larger ambitions than Ukraine. And that's really, I think, the scary part is that if the United States has to get even more involved beyond sanctions, that's another level of geopolitical risk that the market just hasn't accounted for.
I'm going to say what's scary is what came near the end of that press conference after President Biden spoke, where he was asked, are you urging China to isolate Russia? Not ready to comment on that yet. Mike, how do you factor that in? I mean, that's something that I'm watching very closely, the China reaction.
Oh, yeah, because that was going to be the big face-off for the Biden administration going forward. And the Chinese have long had this view that we should stay out of the internal workings of other countries, and here comes their ally Russia doing just the opposite. So what position do they take? Does this embolden them on Taiwan? I think that's a major step to take. We would have to see on that, but it does complicate things tremendously because where's Russia going to turn if it can't trade? It's going to go to China. And so that's only going to bring them closer together. Now, the Chinese are ascendant, the Russians are descendant in terms of their economies. And so Putin would have to be careful there, but it does create a much bigger obstacle for sort of the, I don't want to use the word Washington consensus because that's out of favor, but sort of the Western view of how you should run economies.
But don't you wonder, Paul, too, like I think about President Xi kind of taking notes here, another authoritarian regime, thinking, okay, what does this mean maybe for my intentions or plans on Taiwan?
Yeah, exactly. And I think a lot of, I would say, folks are in Washington are saying, I can draw a line from our removal from Afghanistan to maybe Ukraine to maybe Taiwan, and you could tie all that together. Right. That's not a good narrative for anybody, certainly not the folks of Taiwan and Ukraine, but also for just, the global economy.
And to bring the fact about China and Taiwan, let's take a look at the currency picture, because if you're actually looking at what currencies have performed well beyond the havens, well, during this entire geopolitical risk, the offshore yuan has actually strengthened quite a bit. We're looking at 6.3 when it comes to the rate that the dollar exchanges for a yuan, essentially. What's interesting here is if you actually look at Russian reserves, and this has been the big question, how much have they cushioned their economy? They've pulled out of the dollar for a lot of their debt, for a lot of their reserves, and they've actually done more trades, more exports in euros and yuan. So as we talk about more geopolitical
like they're
tensions,
almost been planning this.
so it kind of seems like it. But those are going to be the currencies you want to watch as opposed to just those havens. Mike,
I was just going to say, Mike, I mean, the Federal Reserve, we're hearing some commentary out of there today. Should they just wait and see?
No, that's what they're going to do.
I
mean, basically, that's all of the Fed speakers today say it's too early to know what's going to happen. The same with a lot of people at the ECB, except for a couple of the big hawks, Isabel Schnabel from Germany and Robert Holtzman from Austria, who were like, we should do 2-3 rate increases this year, and now saying we should go slow and see what happens, because they know they've got a big problem on their hands.
All right, I don't want to stop because you guys are amazing, but we got to. Kriti Gupta, Bloomberg Markets correspondent, and of course our Michael McKee, international economics and policy correspondent at Bloomberg News. You're listening and watching Bloomberg Business Week. Carol Massar, Paul Sweeney. We also do want to welcome our listeners on Bloomberg 106.1 in Boston. They are joining us as well. In the meantime, we've got to get a check on world and national news. Over to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. President Biden says the Russian attack on Ukraine was a premeditated attack, showing it was never about security, but about Russian President Vladimir Putin's naked aggression.
Putin is the aggressor. Putin chose this war. And now he and his country will bear the consequences.
Biden says the U.S. will impose sanctions on Russia that will limit its ability to do business in foreign currencies and will also cut off 4 more financial institutions.
We've now sanctioned Russian banks that together hold around $1 trillion in assets. We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system.
Biden says Putin will soon become a global pariah. Bloomberg's Maria Tadeo is monitoring the situation from Brussels. She says Kyiv is Vladimir Putin's main target.
The focus here will be on the capital of Ukraine. Whenever there's an armed conflict, whenever it's a war, the capital city is always a big prize. This would be a huge propaganda win for Vladimir Putin to say we were there in 24 hours.
But Maria Tadeo says Ukrainian President Volodymyr Zelensky is vowing to stay in the capital to face whatever is next. Residents in Kyiv are taking cover. Mariana says air raid sirens have been going off regularly since the fighting started.
Right now, I'm in a bomb shelter. It's probably the 4th or the 5th time we're getting here downstairs. We stay with our bags prepared, with our documents. Windows are always open because we need to hear the sirens.
Mariana says there are traffic jams throughout the capital and long lines for everything. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's check in with Charlie Pellet for a business flash.
Hi, thank you very much, Nancy Lyons. Fast-moving markets, right to the numbers. Stocks trading mixed. S&P down 19 right now, a drop of 0.5%. The Dow down 456, a drop of 1.5%. NASDAQ up. Best level of the day right now, up 120, a gain of 0.9%. 10-year up 13.30 seconds, 10-year yield 1.94%. Stocks have pared back losses from the depths of a sell-off as President Biden announces additional sanctions on Russian banks and says the U.S. will release more strategic oil as conditions warrant. Crude oil surging today. West Texas Intermediate now up 1.2%, $93.22 a barrel. Brent trading back below $100 a barrel. Brent, the global benchmark, had been trading above 105 earlier today. Right now, a barrel of Brent up 2.74%, up $2.65 a barrel. Gold on the minus side now, down 0.3%, down $6 the ounce at $19.02. Again, the 10-year 1.94%. So again, recapping, U.S. equities are trading mixed. Right now, we have got the S&P down 22, down 0.5. NASDAQ up 120. We have got the Dow down 504. Lots of earnings again after the closing bell today. Among some of the names that we'll be hearing from: Dell, VMware, Etsy, Intuit, Autodesk, and Coinbase Global. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Oh, yeah, there's still earnings going on. You got to remember that, right, Paul?
There still is, exactly.
All right, a lot going on, but as Charlie broke down the trade, we're definitely off our worst levels when it comes to the equity trade. All right, we know there's a lot going on. We are all focused on Vladimir Putin's invasion of Ukraine, Russia's invasion of Ukraine, which has seen military forces go in from the north, east, and south, accompanied by missile and artillery fire. So let's get some thoughts on both the economic and geopolitical implications of that invasion. Peter Cheer, head of macro strategy at Academy Securities, along with retired Major General Maston Robeson. He is geopolitical intelligence advisor to the Academy's advisory board, and he served over 34 years of active duty in the U.S. Marine Corps in more than 60 countries. Peter, from Florida, General Robeson, he is with us on the phone from South Carolina. First and foremost, let's not forget, we are watching financial markets. We are watching and trying to figure out the political strategy, watching these press conferences. But as people keep reminding me on Twitter, there are people's lives at stake and a lot of uncertainty. So I just wanted to put that out there because we do need to keep that front and center. General, let me start with you, though. You've spent more than 3 decades facing global situations and stresses. What are the extreme risks here, and how likely is that to play out in your view?
Yeah, the extreme risks are obviously significant. A lot will depend, I believe, on the world public opinion as to whether that will have an influence on what Putin does. If he receives it, there's sort of a agnostic approach to Ukraine and what he's doing there. I mean, you'd hate to think it, but certainly the Baltic states could be at stake as well. It'd be interesting to see what Finland does if this pushes them to reevaluate their association with NATO in an official capacity. But I agree with some of the decisions that are being made that this, I think there's some merit in looking at what we did in Kosovo back in the late 90s, where we really did harshly target not just the national leadership, but the oligarch level that were the business leaders and the finance leaders. So I think what I see U.S. and United Kingdom and others doing of freezing assets and seizing assets, or at least threatening to, will have as much or more of a powerful influence as, using military force to counter. I don't see the United States putting ground forces on the ground, but we'll certainly support with intelligence, with command and control, with air. NATO is certainly not committed to committing ground forces for Ukraine, but they have certainly a historical association to say we want to defend the concept of a democratic process that they've seen going on in Ukraine over the last decades.
And General, just to follow up, Bloomberg is reporting that Western allies see Kyiv falling to Russian forces within hours. Does that surprise you, that it's that swift?
Well, it doesn't surprise me it's that swift if that's what Putin wants to do. He could easily do that. My concern is if Kyiv falls, there will certainly high likelihood of a fairly significant refugee problem flowing out of Ukraine into Europe. That will change the metric on Europe. Historically, when you look at the Balkans, when you look at Kosovo in that area, it was one thing to go in and say we need to stop ethnic cleansing, but it changed the whole metric when you started having 1, 2, 3 million people refugeeing into Europe and the financial burden that put on the EU and on NATO. And that will certainly change the metric as to whether it's a threat to NATO economically, even if it's not a threat to NATO militarily.
All right. Well, story just crossing the Bloomberg just about 20 minutes ago. Companies postponing bond sales in the U.S. and Europe, and credit risk gauges surging after Russia invaded Ukraine. Peter Cheer, I got to go to you on that. You're head of macro strategy at Academy, watching the markets here. We have bounced back from kind of the more severe risk-off trade earlier in the day. How do you see it, and what in particular disturbs you when you watch the financial markets?
So clearly we've had a lot of excess risk in the system. We haven't gone away from having to deal with the Fed, and the Fed's fighting inflation. There's certainly no easing in the inflation pressure from this. So I think although this is impacting markets, we had that battle with the Fed. That's ongoing. We were at high valuations. I've become a little bit constructive this morning, actually yesterday. Obviously, this overnight was a little bit scary, but kind of added more risk. And really the view there is that if this can become contained, if these sanctions are effective, slows them down, people kind of calm down and say, okay, Ukraine and Russia, this is awful for the people, particularly in Ukraine, but it is only a small part of the global economy. We will figure ways out around that. So I think That's why we're getting some of this bounce, is people are starting to try and say, if this is contained. So I'm comfortable with that for the near term. I'm a little bit concerned, one, that Putin won't be contained, that he sounded so aggressive Monday and again last night in his speeches that he is going to push the envelope. And the other thing is we have not discussed really what's China thinking about this? What does China do? Does China threaten anything? So I think there's a lot more things going forward that could go wrong than good. So although it's constructive, I'm pulling back a little bit. And the other area, though, I am very constructive on, the U.S. energy industry. I think this has to change for everyone going forward, how we think about energy, where we get our energy from, both in Western Europe and the U.S.
I felt like we had gotten there, Paul, for a while, right?
Yep, shale. Shale was all the rage. It went from being a net importer to a net exporter. But again, it just highlights the risk, particularly in Europe, on Russia. Peter, one of the issues here that I've seen analyzed today and discussed today is inflation. It's obviously one of the big headwinds for financial markets, even before today. But when you think about some of the sanctions, you think about where energy prices can go in the near to intermediate term, does this raise the inflation risk profile for you in these markets?
Sure. I think we're going to see some commodity inflation. We're also probably going to see some supply chains, right? If we start not seeing the flow of goods or commodities from Russia, that could screw up people's supply chain. So I do think this is going to be a little bit more inflationary. However, because it's going to be so clearly identified as this, I think it will give the administration breathing room maybe to help people out in some way, whether they can reduce gas taxes, whether we reinstate some of those child tax credits. Something to mitigate it is much easier now that it's so clearly defined. This next boost would really come from Russia. So I think, and the Fed will also be able to put on hold because this will be viewed as temporary.
Wait, when you say Fed on hold, that means nothing March or just?
I think the 50 bips in March is certainly off the table right now. I think they're going to be very careful about what they do when you have this period of volatility. And it's almost regardless of what market you're looking at, they are behaving very, very illiquidly, right? And we know during the pandemic, one of the things that scared the Fed was how illiquid the Treasury market had become, so they intervened. We're not at that stage yet, but you just look at these gaps, these air pockets where stock prices or bond prices are one level, and then you look 2 seconds later, they're at another level. So I think people are going to be very cautious about hiking, squeezing down liquidity when you're seeing the market really struggling to digest all this.
General, Russia, 150, maybe 200,000 troops, Ukraine, over 40 million people. What does Putin do after the government falls? Is it you can't occupy with that kind of force, can you?
No, you can't. And that is obviously the big question is what is his really long-term intent? Is it purely and simply to own the eastern part of Ukraine so he overreaches?
All right, let's get another check on that trading day and your top business stories on what's been a volatile day. Here is Charlie Pellet.
Thank you very much indeed. Mixed markets right now, as you mentioned, the Dow, the S&P, they are both lower. S&P little change. NASDAQ is pushing higher. Do want to begin, though, with a headline from the Bloomberg Professional Service. The Securities and Exchange Commission is probing Elon Musk and his brother over Tesla stock sales. This according to Dow Jones. Tesla shares, they do remain higher. They initially fell on that word, but up now by 1%. Again, repeating that headline. SEC probing Elon Musk and his brother over Tesla stock sales. Again, this according to Dow Jones. President Biden says the United States will impose sanctions on Russia that will limit its ability to do business in foreign currencies as President Vladimir Putin's decision to invade Ukraine sparks the worst security crisis in Europe since World War II. The S&P 500 index lower by a point, little change right now. We have got the Dow Jones Industrial Average down 348, down 1.1%. At one point, the Dow was down 859. NASDAQ, best level of the day right now, reversing a 450-point drop, up now for NASDAQ by 182 points. NASDAQ higher by 1.4%. 10 years up 10/30 seconds, 10-year yield 1.95%. Spot gold down 0.9%, 18.90 the ounce, while West Texas Intermediate crude is up 0.3%, 92.35 a barrel. We've seen big moves in crude today. Brent, for example, was trading above $105, still positive on the day, up 1.6%, 98.39 right now on Brent. As for market implications with the Russian invasion, Christian Nolting is Chief Investment Officer for Wealth Management at Deutsche Bank Private Bank.
I think where the most important adjustment needs to take place is, first of all, in the energy prices. So what will be the action functions from sanctions and what will be the action function from Russia on sanctions as well. So, and that has then consequences on inflation, and that has also consequences on growth. And regionally, that means, no surprise, that's more towards Europe than towards the US or Asia.
And Christian Nolting of Deutsche Bank was talking about energy. Energy stocks are lower today among the big oil stocks. ExxonMobil, for example, down now by 3.4%. BP plunging by 8.1%. Chevron down 2.6%. EOG Resources lower by 3.2%. And Pioneer Natural Resources down by 2.3%. Recapping 10-year yield 1.95%. NASDAQ up 187 points. Best level of the day right now, up by 1.5%. As I speak, S&P 500 index just turning positive, up by 1 point right now, wiping out a 110-point loss. The Dow down 326, down 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We appreciate that. When I woke up to this news today, Carol, I said, this is so 20th century to me.
It does feel that way.
Aren't we past,
Invasions?
Russia invading an Eastern European country? It just seems so, again, 1960s, 1970s, but here we are. And as I was thinking about that, I came across an awesome article on the Bloomberg Terminal, how Ronald Reagan would have handled Putin's aggression. Tyler Cowen, he joins us. He is the reporter on this. Tyler Cowen, columnist for Bloomberg Opinion and a professor of economics at George Mason University, joining us on the phone from lovely Fairfax, Virginia. Tyler, again, I love this column because it went right to the thought process I had is like, who does this stuff anymore? How do you think Reagan, or how do you think Russia views us? How do you think Reagan maybe would have dealt with a character like Vladimir Putin?
Russia views us as internally divided, more concerned with attacking and criticizing each other than standing up to tyranny in the world. They sense we are weak and that this is their moment to strike. And I think what Reagan understood very well is that America needed to be relatively unified. Doesn't mean we agree on everything. And realize the true threat is actually an external one, and that there are some governments that simply are evil and will do evil things, and we need to stand up to them.
That's the point I loved, is that I think of President Ronald Reagan in his cowboy hat and his cowboy boots, right? And this whole idea of there are good guys and bad guys. Do we need kind of a rethink when it comes to our, political observations in this world right now?
We very much need that rethink. If you look at a lot of the Republicans, they're saying, well, Putin, he's okay, or Trump is even saying Putin is this genius. You go back to 2012 when Obama debated Mitt Romney. Romney said Russia's a real threat. Obama mocked him, said that's like some old, out-of-date Cold War mentality. You can even see it on the tape on YouTube.
Well, and if I can just, so China, good guy, bad guy, right. Like, because that folds into this, Tyler.
Well, I think the key thing to do with China or with Russia is that in advance to have very strong alliances to advance American interests and democratic governments and ideas of liberty, and not wait until the last moment when you need to improvise something. So Ukraine, I think the last few weeks, Biden actually, he's done a perfectly good job. But there's been really decades of just letting the issue run on and not treating it as a priority. And it's going to be hard for American interests to be represented in what finally happens.
Do you think Washington gets this, Tyler? I mean, if I'm a Russian intelligence agent, I don't have to be very good. All I have to do is turn on the television news over the last 6 years, and I see Americans all around the country literally fighting with each other, physically fighting with each other for the last 6 or 7 years, and we rarely saw that before. Do you think Washington gets that?
I think people are starting to get it, and I hope that what's happening in Ukraine, for all of its tragic sides, will be a wake-up call and have some positive effects on this country. But look, this is day 2 of the actual fighting. We don't know yet. There's a risk it will disappear from the headlines, and America will go back to how it was. And I wrote the column hoping to show people, no, we need to recapture this older vision. Freedom really matters. Some countries believe in freedom, other countries don't. That's a fundamental division. And to make that the centerpiece of our attention.
And abroad, NATO, I guess people were questioning the solidarity of NATO, but up to this point, it seems like President Biden and the other leaders of the West have projected a pretty strong and united NATO. Is that kind of how you're reading it?
Well, there's a lot of different moving pieces here. I would say overall the sanctions appear to be weak so far.
Yep.
I don't blame that on NATO. But when Biden gives a talk, the Russian stock market goes up. I don't know. I don't blame the people in the moment. They're playing a bad hand in terms of the cards. But it does seem to show we're not very well positioned to have an effective response.
So there's even been division, obviously, in the Republican Party about the response to this. I mean, there's division, so much political division here, right? So how do they come together? Will politicians kind of figure their way past through the things that they don't agree on to kind of figure out what we need to do to fight those evil empires that are out there? And just got about 40 seconds.
Republicans need to decide that the sympathetic to Putin factions in their midst don't really have a place in the party. I hope that will happen. A prediction, I don't know.
Well, interesting, right? And another layer to all of this in terms of how we deal with this domestically. Tyler, really thoughtful column. So appreciate it. Tyler Cowen, he is columnist at Bloomberg Opinion, professor of economics at George Mason University, joining us on the phone from Fairfax, Virginia. But I do think about this, right? This is a time, we needed it during COVID, right? We need it now in terms of unity.
Yes, absolutely. And again, I think the rest of the world sees what we see and sees what is actually happening in our country. And maybe this is a repercussion of that.
I'm thinking about the State of the Union. Like, are we going to be dealing with this, and how much, ultimately we'll have to play, or will it be something we can look and start to put behind us? Fingers crossed. All right, let's get back to world and national news. We've been covering it all hour. Here's Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. That's the sound of war descending on Ukraine. Citizens of the country are being told to take up arms. Russian military vehicles are already in the northern region that includes the capital of Kyiv, and Russian President Vladimir Putin has made it clear his goal is to take over the government. The U.S. is responding by announcing new sanctions against Russia that President Biden vows will inflict a severe cost on the Russian economy. They include sanctions on 4 more Russian banks that represent an estimated $1 trillion in assets, and limiting the ability of the Kremlin to raise money from U.S. and European investors. Biden says he's working to do what he can to prevent Americans from feeling the pain caused by reduced Russian oil supplies.
I know this is hard and that Americans are already hurting. I will do everything in my power to limit the pain the American people are feeling at the gas pump. This is critical to me.
Biden says Putin's actions, though, cannot go unanswered. Global affairs analyst Ian Bremmer of Eurasia Group calls this the start of another Cold War and tells Bloomberg Vladimir Putin was never honest about his intentions.
You don't deploy that kind of force and risk not just tens of thousands of Ukrainian lives, which will be lost, but also Russian soldiers. You don't do that unless you intend to overthrow this government.
Ian Bremmer with Eurasia Group, a Western intelligence official, says it's likely that Kyiv may fall to Russian forces by tonight. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Nancy Lyons with the World and National News update there in our D.C. Bureau. Just a reminder, folks, we are pretty much at our best levels of the session when it comes to the equity trade. So we're up 1.8% on the NASDAQ, S&P just a hair higher, Dow still down about 1%, but definitely off our lows of the session. Meanwhile, one of the things that came up in when President Biden made those comments about more U.S. reaction to that Russian invasion, he also took some questions, and one of the questions was about China. It sounds like he's not talking too much about that yet. And we also haven't heard much talk from China about this Russian invasion.
I tell you, one of the great things about being back says China is paying very close attention here. He doesn't think China told Russia, don't do this, you shouldn't do this, he says they're just watching and see how everybody reacts, see how the U.S. reacts, see how the NATO reacts, see how the central bankers react, because they've got some chips on the table too as it relates to other parts of the world, namely Taiwan.
You're like me. Andy Brown, we usually have him on every week. He's been out doing some Olympic coverage for NBC.
And growing a beard.
And growing a beard. I had to take a double take when I saw him up on TV. Same thing, I started jotting notes. He talks about China tethering itself to Russia. We know that China's benefited from economic globalization. China is Ukraine's largest trading partner, but China believes democracy is also on its last legs and wants to push back on democracy. We heard, I think, Peter Cheer also talking about this whole idea of, crushing the dollar.
Yep.
We know China's been on a mission to this. Andy also saying earlier on Bloomberg TV, China wants to rewrite the global rules. We know that, Paul.
Yes, we do. And they're ascendant, and we just spent 2 weeks in China with watching the Olympics, and we saw how tightly controlled that was and how they're dealing with the pandemic. So a fascinating angle here as we keep our attention on Eastern Europe.
And China's still refusing to condemn that Russian attack, so we're waiting to hear that, and we'll see if it happens. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got the S&P, NASDAQ, both trading higher. The Dow remains on the minus side. 10-year yield right now, 1.95%. Stocks paring back losses from the depths of a sell-off as President Biden announces additional sanctions on Russian banks and says the U.S. will release more strategic oil as conditions warrant. Crude been on a wild ride today. At one point we had Brent, that's the international benchmark, trading above $105 a barrel. Barrel of Brent still higher at $98.92. Brent crude up by 2.1%. West Texas Intermediate crude up 77 cents a barrel, $92.86 right now on WTI, higher now by 0.9%. Spot gold retreating now by 1.1%, down 20 points, $18.88 the ounce. And again, the 10-year up 11.30 seconds. 10-year yield right now 1.95%. The Dow, the S&P, NASDAQ trading mixed with the S&P up 11 right now, higher by 0.3%. And worth putting today's movements in perspective because at one point we had the S&P down 110, or again the S&P up now by 0.4. The Dow at one point down 859, down 2.6%. Again, the Dow lower now by 238, down 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I know the swings alone are just wild. Yes. I've just been looking at, right, from peak to, from high to low, basically. Hey, listen, one other story that's certainly been on our radar is today's Bloomberg Big Take, and it covers how President Biden's inner circle feared sanctions to scare off President Putin, that they wouldn't ultimately work. And that story from Bloomberg News foreign policy reporter Nick Wadhams. You can find it on the Bloomberg and at Bloomberg.com. But Nick, luckily for us, joins us on the phone from Washington, D.C. So, Nick, what were you hearing about President Biden's inner circle when it came to sanctions?
Well, today and the president's recent press conference he just has had now has kind of thrown everything up in the air. But essentially what I was hearing over the last few weeks, and the story I wrote that came out this morning, was that the administration had been pushing a strategy telegraphing that, they wanted to tell Vladimir Putin how bad the sanctions against him would be as a way of deterring him from going to war. Of course, then the president just gave a press conference just now saying no one had ever believed that. That's what I was hearing from a lot of folks, that they never really believed the strategy. And that's important because the administration is just sort of fundamentally rewriting the way that sanctions are used. They wanted to test this proposition that, okay, we're not willing to put military boots on the ground in Ukraine. What we're going to do instead is telegraph the severe economic sanctions that you'll face if you invade. And obviously, President Vladimir Putin just ignored that. He's gone ahead and showed that that threat didn't deter him after all.
Yeah, Nick, that's kind of where I wanted to go, because I'm just looking at your story here, and you reported that late last year, President Biden, made it clear that the U.S. would not send troops or heavy weapons to Ukraine. In hindsight, was that admission, was that strategic communication a mistake?
Well, they argue it was not a mistake because they felt that the primary purpose of that in a lot of ways was to make sure that Vladimir Putin had no excuse, that the world was very clear about what exactly he was doing and how his arguments had no basis in fact. And they really wanted to project an air of unity, allied nations arrayed against Vladimir Putin, and to isolate him. So the messaging campaign toward Russia for a long time has been about not just cornering Vladimir Putin, but making a bigger point, sending a signal that allies were united, and also sending a signal to other countries like China, if it has designs on Taiwan, we're not going to let you get away with it. The problem there, of course, is that if Vladimir Putin is able to get away with it, if these sanctions are not as impactful as the U.S. claims they are, well, then Xi Jinping may get the opposite message and realize that he can do it without maximum punishment from the West.
So, Nick, reading the tea leaves today, I'm sure you're talking to your sources in Washington. You got to tell me, or I hope you can tell me, there's some bipartisan support for condemning what Russia is doing. Do you have that sense that Republicans and Democrats view this for what it is, which is, an invasion of essentially an inferior country in terms of military clout?
Yeah, I mean, we are well past the days when you would see an action like this trigger a response where there would be, bipartisan statements where you would have senators and members of the House from both sides of the aisle issuing joint statements saying that, foreign policy issues like this stops at the water's edge. We're united in confronting Putin. But, I mean, generally speaking, they are actually pretty unified in their approach to this. Both sides are now calling for the same thing. They want really intense sanctions. They want Biden to keep going. They want more help for Ukraine, and they're pretty strident and similar in their condemnations of Russia. Of course, Republicans, in large part, also blame Joe Biden for this. They say that Putin took advantage and got a signal from what happened in Afghanistan, and he pounced on it. Democrats aren't making that claim, but there is general unity on condemning Russia for the invasion itself.
What's interesting, too, and I wonder, there are sanctions that maybe, Russia can kind of shake off, but there's been a lot of talk about the international payment system and the international, how we are all connected financially and maybe blocking Russia from SWIFT. And so I do wonder, how does the inner circle feel about something like that?
I think they have always been very, very reluctant to use SWIFT for a couple of reasons. One, because you can achieve a lot of the goals of, if you sort of issue a blanket ban on Russia being able to do financial transactions, that's like dropping a nuclear bomb. Whereas if you go sanction individual banks, well, then you can achieve the same effect with those banks. But if you say, no, Russia can't conduct any financial transactions through SWIFT, that then makes it impossible to do any of the sort of legitimate activity that is allowed that's not affected by sanctions. So the economic consequences to the West would be extremely severe. And they've always been very wary of doing SWIFT, though the administration says it's not ruling it out in the future if Vladimir Putin goes even further.
Hey, Nick, one of the interesting articles I read on the Bloomberg today was just kind of some reporting about maybe a little silver lining here for this whole issue here with Ukraine is the U.S. intel was spot on. And as opposed to, say, back in 2003 with the mass destruction and all those weapons of mass destruction, is there a feeling in D.C. that our intel really did get it right?
Yeah, I mean, I think you're going to see a fair number of victory laps by the intelligence community. But, what I've heard from folks, too, is that the intelligence in this case was pretty unambiguous. So obviously there's a lot they're not telling us about the degree of certainty.
Right.
They had the suggestion that there's some signals communication, but those satellite photos, I mean, man, those were pretty self-explanatory when you had Russia massing all those forces on the border.
All right. Thank you so much, Nick. We appreciate it. Bloomberg News foreign policy reporter Nick Wadhams joining us on the phone from Washington, D.C.
All right. February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for February 24th, here is Bloomberg's Renita Young.
On this day in Black history in 1864, Rebecca Lee Crumpler becomes the first Black woman to receive an MD degree. To put that into perspective, in 1860, there were only 300 women out of 54,543 physicians in the United States. None of them were African American. Crumpler first worked as a nurse in Charlestown, Massachusetts, before she was accepted into the New England Female Medical College. It was during a time when male physicians claimed women did not have the physical strength to practice medicine. In 1883, Crumpler released Book of Medical Discourses, which was one of the first medical books written by an African American. That's today in Black history. I'm Renita Young, Bloomberg Radio.
And that, of course, is Bloomberg's Renita Young. You're listening to Bloomberg Business Week. Paul and I are going to join our TV colleagues for a look at the markets on this volatile day. This is Bloomberg.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostick, Kaylee Lines, joined now by our colleagues Carol Massa, Paul Sweeney, as we have once again more special coverage at Bloomberg across TV, radio and YouTube, as the inevitable for many seems to have occurred with Russia indeed intruding upon Ukraine, Carol, and the ramifications are swift but extraordinary bounce back in terms of stocks.
Yeah, that bounce back is what I find, and the range from high to low. We've had about a 3% swing on the S&P 500 and about 5.5% or 700 points on the NASDAQ 100. You know, Paul, I'm thinking about how you started your day, and very different, right, from where we are today.
Very different. I'm just take a look at Brent crude here. We were over $105 a barrel, and now we're back down at $99 a barrel. So really a tremendous amount of volatility in crude oil.
Volatility in the NASDAQ, for me, front and center. We're currently looking at the benchmarks for our radio audience. I see the NASDAQ currently up 1.9%. Remember, this was a benchmark that was off about 3%. We were worried about growth stocks. We were worried about inflation. And now we see maybe a search for safety, or indeed the sanctions coming from President Biden not being as tough as some had expected. Dow Jones, the only key benchmark in the red, still off by 0.6%. That's 220 points to the downside. The S&P 500 now up 15 points. That's 0.3% higher. Russell 2000 also in the green to the tune of 1.25%, Kaylee.
Well, I think it's the NASDAQ and the NASDAQ 100 as well that really are remarkable here, because at the start of the day, we were talking about the precipice of a bear market, and now it is actually tech that is outperforming. And that is true, too, at the sector level. When you look beneath the surface of the S&P 500, your best performers on the day, communication services and information technology, they're each higher by the better part of 2%. What's on the bottom is a lot more of your cyclicals, energy and financials. Energy, of course, the outperformer on the year, but a laggard on the day as we saw oil prices rolling over. And then consumer staples, which, of course, is very sensitive to inflation, also is down pretty hard on the day. It's down by about 2.5 percentage points, Carol.
Let's have a quick look across asset, Romain, because I think also the oil reversal has been significant. The fact that it is still high, but not to the tune of much. We're above more than $100 a barrel. But this is a great chart. GMM, Global Macro Movers. You saw Europe fall hard. You saw the dollar still higher against everything. Yen rallies, dollar rises, euro goes lower. We see money fly into the safety of sovereign bonds. Commodities is an interesting one.
And we should point out, too, I mean, and commodities is an interesting one. I do want to comment, though, on the sovereign bonds, because we talk about this reversal that we've seen in the equity market here. That completely hasn't been unwound in the debt space and in some of those havens. You're still seeing that bid come into the dollar. In fact, the dollar is still having the best day against pretty much all of the world, not only the developed currencies, but the EM currencies, going back to the March 2020 sell-off here, even beating out the Swissy, even beating out the yen here. That flight that we saw into treasuries, well, that's still sticking. You go overseas and you look at the sell-off that you're seeing in Ukrainian bonds, Russian bonds, that's still there. The rise in CDS here. So while there is certainly a buy the dip moment here in the U.S., I don't think everyone is quite on board with the idea that, I guess, the all clear has been given.
Well, and that's a really good point, certainly on the corporate debt markets, right? We've seen companies both in the U.S. and Europe canceling bond sales. So that is definitely playing out. So there is still nervousness in the markets. You know, the big question is at this point, we need to be thinking about what is the Fed thinking about, and whether or not what's happening, unfortunate certainly for the people of Ukraine, but what does it do to the U.S. economy? How does it change their trajectory? There have been a bunch of Fed speakers out there, and we just wanted to mention some of them because it really plays into how we think about where we go from here, certainly in the U.S. market. Loretta Mester of the Cleveland Fed president, she came out and said, barring an unexpected turn in the economy, I believe it will be appropriate to move the funds rate up in March and follow with further increases in the coming months. She also went on to say the implications of the unfolding situation in Ukraine for the medium-run economic outlook in the U.S. will also be a consideration in determining the appropriate pace at which to remove accommodation. Raphael Bostic over at the Atlanta Fed saying if the numbers coming close to that, I think that we can continue with our liftoff plan. We will just have to see where things go, right? So just kind of hedging it a little bit, guys. Yeah. So what?
I feel like it's convenient. It gives them cover. And look, I mean,
no, isn't it truth? Isn't it reality? Like if this gets if we resolve this in a week, then things change in terms of the outlook. You already see it. People are coming back into the market saying, well, wait a minute. We've talked about it. Romain, you've brought it up in terms of military conflict.
I have.
These things tend not to last longer term.
Absolutely. And we heard from the President of the United States, it does not appear that at least the Western nations are ready for any sort of real military confrontation here. Maybe this is a ceding of the Ukraine, and as horrible as that is from a humanitarian perspective, yes, the economic ramifications, at least here in the United States, probably won't be as severe, and maybe that gives the Fed Fed the ability to continue forward apace with what we think they're going to do.
And I think what we all have been noting is the whipsawing in the market on the back of that statement coming from President Biden earlier at about 1:30 p.m. that sort of upended the views that maybe they'd take a really hard line. We're going to go to the White House now. Bloomberg Chief Washington correspondent Anne-Marie Horden joins us. And look, the markets have decided that the president didn't go as harsh as they thought he would.
Yeah, and there's two really big things probably for that, and that Russia was spared this afternoon, their evening, which is one, they're still going to be allowed to transact in the SWIFT payment system, the Gmail of transactions, millions of transactions a day. This is something that crippled Iran's economy in 2012. Second, of course, is that for the most part, as far as I'm seeing, and we're going to get a briefing with Jen Psaki, the press secretary, alongside one of the president's chief deputy national security advisors when it comes to international finance, I see that Russian oil and gas, for the most part, comes out unscathed. This is the lifeblood of the Russian economy that pays for the military. This is how President Putin has stored up his billions of dollars. This is at the heart of the matter. But again, the president made clear he's going to do everything he can to protect American consumers at the pump. So for a while, that says to me that Russian oil and gas is off the table.
Yeah, that's really certainly, I think, what American consumers are thinking about. Anne-Marie, what did you make of when President Biden was asked about China? Are you urging China to isolate Russia? He said he's not ready to comment. In the meantime, we did have a headline cross that the Chinese embassy in Ukraine preparing flights to evacuate citizens. How do we need to kind of strategize and think about China as an element here?
Well, I think last night China made clear they're not going to come out swiftly against Russia or backing Ukraine. But they were one of the only one last night at the UN Security Council meeting to not have a serious condemnation against Russia regarding what we saw of that invasion. This is a very thin line, tight line for Xi Jinping to straddle. Of course, while he sees sanctions that are pretty significant being placed on Russia due to their invasion of Ukraine, this potentially may be what he is watching if he was ever to make a play for Taiwan. Also, I've said this a few times today, and I think it is pretty important. Xi Jinping doesn't want to be preoccupied with this right now. He is about to have an enormous Communist Party meeting, and that's what he wants to focus on.
All right, great point. And you have just been rock solid. And I'm not sure if you're getting any sleep, but man, your coverage has been killer. Anne-Marie Horden there at the White House. Folks, we're going to be back in less than an hour's time. We'll count you down to the close with our cross-platform coverage Beyond the Bell on radio, TV, and YouTube. We'll be back counting you down to the close at 4 p.m. Wall Street time.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So crazy that if you think about how we started the day, and I really thought I was watching futures. I'm sure you were like kind of overnight, late, into the early hours. And here we are.
And here we are, led by the tech stocks, NASDAQ up 2.3%. And, it's just been extraordinary. I think it just takes time for people to digest what's going on. As Anne-Marie was just reporting there, maybe the market's sensing, boy, these sanctions could have been a lot worse for the global economy. And so maybe the fact that the president didn't go there, at least initially, taken as a little bit of a good sign here by the markets.
Right. And we talked earlier about like playing chicken. We know it's no longer that, right? Things are happening. Certainly Russia with the invasion and China, the United States and its NATO allies taking steps. But you do feel like they continue to take steps, right, Paul, rather than kind of a very severe smackdown.
Yeah. And I think the signaling here, the communication here by the White House has been very clear, very concise, and it's kind of playing out as we thought it might. And then again, that is something that markets probably appreciate. Don't like uncertainty. We've heard that a million times. That term as it relates to the markets. But there is a lot of truth in that. And I think this administration's done a pretty good job of trying to, again, signal and communicate how they're going to respond here. So at least it's done in the sense that the invasion has occurred. Now we can start thinking about outcomes.
The UBS Global Wealth Management Chief Investment Officer earlier put out some research and said Russia has a strong economic interest in continuing to sell its energy and other commodity exports to Europe. And so he thinks that this will weigh against a long-lasting military engagement. You just do wonder, right, how important it is to Putin.
Absolutely.
That he's still involved in this. All right, back to World and National News. On it, Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden calls Russia's assault on Ukraine an unprovoked, premeditated attack on the people of Ukraine.
For weeks, For weeks, we have been warning that this would happen. And now it's unfolding largely as we predicted.
Biden unveiled another round of sweeping economic sanctions against Russia. They target Russian banks, oligarchs, state-controlled companies, and high-tech sectors, with Biden adding they were designed not to disrupt global energy markets.
We have purposely designed these sanctions to maximize the long-term impact on Russia and to minimize the impact on the United States and our allies.
Biden says this is a dangerous moment for all of Europe, and the next few weeks will be especially hard on the people of Ukraine. The Russian military's already effectively eliminated Ukraine's air defenses and rapidly advanced toward the capital of Kyiv. Russian President Vladimir Putin gave his own address earlier today, justifying the attack, saying it was a matter of security for the breakaway republics. He says it was the West that created the fundamental threats that prompted his actions. He speaks here through an interpreter.
Circumstances require firm and immediate actions from us. Donbass's People's Republic asked for help from Russia. I decided to conduct a special military operation.
Putin ended his speech saying anyone who tries to get in their way should know that Russia's answer will be immediate, and it will lead to consequences of the sort we've never faced in our history. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. bureau and our 99.1 studio in Washington, D.C. So, we talk about the legitimization of cryptocurrencies. Yep. Well, it may be getting a big kind of leg up because of the crisis here.
Yeah, so a lot of folks are saying there's a good article on the Bloomberg today, crypto is potential new tool for billionaires to avoid sanctions. And I said, was my aha moment. I was like, oh, that actually is, I get it. It's supposedly anonymous accounts, and you put your money in crypto, Bitcoin, and Ethereum, and whatever else you're buying there, and that might be a way to shield some assets. Because I've been saying today, if you want to push these oligarchs and really press them, take back, repossess their flats in the West End of London, take their yachts that are moored down in the Caribbean. You'll get their attention very quickly.
Well, that's what I was going to say. I'm glad you opened that door, because you and I have been talking about these, various parts of the world where there's lots of tensions, whether it's China or elsewhere, where there are very wealthy individuals who we've done the stories that they are moving their assets out of these unsettled areas to protect them. And, crypto is certainly one of those tools that you can add to that tool chest.
Yeah, it's interesting. I mean, I think it's...
and be secreter than that London flat that you can be seized.
Exactly. Or in the 57th Street there on Park Avenue, the huge building that is supposedly occupied by international folks, and it's dark at night because nobody's there. So there is some opportunities there, but we'll see how effective these sanctions are. I mean, it's a mixed bag. As we reported on earlier, even some folks in the Biden administration recognized this early on that they're going to have limited effect, but. What's the alternative?
No, exactly. But you do, I do wonder. I agree with you that you think about whether it's President Putin, one of the questions we've been asking certainly around the newsroom, where's his money? Like he's been certainly moving a yacht and moving different things. And you do wonder about that's a pressure point, certainly, that the world can impose on these leaders, I'd guess, right?
Yeah, exactly. And I think, it's an oligarchy in Russia, so you could probably target these things very easily. But you can see how the U.S. government plays that.
All right, we'll continue our coverage here. Paul Sweeney, Carol Masser, we are Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Dramatic recovery on a turbulent day for the U.S. stock market. Massive reversal, at least for NASDAQ. We've got the S&P pushing higher. The Dow does remain lower, but what a change from earlier in the session. Let's get right over to the first word breaking news desk. Lots going on. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with an aggressive rally off the open, led by beat-up technology names. Dow is currently down 172 points, was down 859. S&P is, like you said, are higher by 27. NASDAQ is now higher by 294. The U.S. 10-year yield at 1.97%. Gold is down 20. Oil is well off the highs. And Bitcoin is now up by 3%. Among the main 11 S&P sectors, leaders were telecom, tech, and consumer discretionary. Consumer staples and financials led to the downside. And leaders to the upside in the Dow, Salesforce and Microsoft, while JP Morgan and Merck were under pressure. In deal news, the DOJ plans to sue to block the $13 billion United Health deal today. And in other news, Dow Jones also reported that SEC is probing trading by Elon Musk and his brother. Regarding the Ukraine, Biden is sanctioning Russian banks and will limit Russian ability to do business in dollars. And wrapping things up, Autodesk, Beyond Meat, Square, and Monster all report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Well, one of my favorite terminal functions I learned from one Mike McGlone is GLCO. It just gives you a global commodities overview. And as I look at it today, energy, lots and lots of green. Metals, I got mixed. I got some red there, but just big movements. European nat gas doubled. I mean, up 50%.
Want to buy some
crazy.
wheat?
Exactly. Buy some hard red wheat. So let's talk commodities. Mike McGlone, senior commodity strategist for Bloomberg Intelligence, on the phone from Miami Beach, which is another story entirely.
Hashtag scam.
Hashtag scam, but he has worked it out. He's the smart one among us. Mike, what did the commodity markets tell you today? Let's start with energy, boy. We had Brent crude at $107 a barrel. Now we're below 100.
Hey, Paul and Carol. Buy the rumor, sell the fact. What the markets are telling me today. So here's a fact of crude oil. Crude oil has had about 80% drawdown since the peak in 2008, and now it's got a great trigger for another one. I think crude oil, after this event, maybe it trickles around $100 for a while, but can actually drop to near 30. And that's not profound at all. It's just what it's done 3 times in the last 14 years. Because look what's happened in the world. The U.S. is now a massive net exporter, and we just got the best incentive on the planet now. It's actually patriotic to produce crude oil, liquid fuels, and grains and commodities in the U.S. That's a fact. Russia, thank you for that. And I think what happened today is, yes, it's horrible what they did, but they just triggered the end of the old world and the new world, who's been going towards renewable energy and decarbonization, electrification, to completely accelerate that process.
Are you saying commodities are the new metaverse? Is that what you just said?
Well, the key thing about commodities, Carol, is the North America, U.S. and Canada combined, is the metaverse, is the epicenter of commodity production and exports. The largest exporter of LNG on the planet now, liquefied natural gas, is the U.S. If you combine the U.S. liquid fuel production with Canada, we are going to be at a 15% surplus this year to consumption. And that is before this price incentive. So now that we have this motivation, to me, this is just the trigger for the new world in free markets to push Russia aside and say, guess what, we're going to beat you at technology. And so where's Russia and Ukraine going to export their commodities to? China. Now, China's in decline. Their property problems are a problem. Remember, the key thing I'll leave you with this is China is having almost the exact same problems the U.S. had when the 2008 crisis hit. They're having a property, real estate crisis, and they are the net largest importer of crude oil. Remember, 14 years ago, that was the U.S.
So the shale producers, I am shocked that they are been so disciplined. I mean, what does the commodity market think? Our friends down in Texas and Oklahoma are just going to start opening the spigots and digging holes in the ground?
It's lagging, Paul. I mean, they don't have to dig the holes in them. Going. That's a key thing I published the other day. Rig counts is insignificant now. When you can hydraulic frack and drill horizontally, it doesn't matter the rig counts. In fact, rig counts are well below the peak from 2011. So rig counts peaked in 2011, yet the U.S. liquid fuel production has doubled to about 21 million barrels a day. And I see liquid fuels because of my farm background, all that ethanol. So this is just a major motivational factor for North America, which is very isolated and protected, to just crush it. Now it's I think what might also trigger is a potential recession. We needed a little trigger, we got it. It's really bad for Europe, but from a commodity standpoint, I just look at the farm background of the people I know in the farmland. They're almost, right now, the price is almost double their cost of production. They're saying, thank you, sell a little forward, we'll that back 40, I wasn't gonna plant, I'm gonna plant it now.
So how do you trade this then, Mike?
Well, that's the key thing, Carol, how you trade it. So I think what's happening now, what triggered this is, as even Gina Martin Adams, when she gets a little bit bearish equity,
she's so important. She has 3 names. Yes. I'm just going to put it out there. And I'm like, hail to the queen, Gina Martin Adams. Anyway,
I do too. And when Gina gets a little bearish equities, my point is, okay, let's sell the rips in equities and buy the dips in commodities and cryptos. Like the key thing that was the point today is everybody's making fun of Bitcoin for being down and gold up. Look at how the day ended. Bitcoin's up and gold's down. It's going to the new world, the digital world, which Bitcoin is much more protected. I mean, remember, Russia's got a lot of gold. They ain't got a lot of Bitcoin, and they can't control Bitcoin, so it's impressive.
So real quickly, nat gas for the Europeans, what's the solution there?
Well, that's a problem. It's imports from the U.S., liquefied natural gas. We just have to ramp that up, some from Qatar too. But come next year at this time, Paul, let's fully expect inventories in Europe will be bloated, because if they're not, it's their fault. They'll just be doing anything in the world they can get them there. As much LNG as possible will come from the U.S. and every part of the world. Russia will be passed up. Right now, yes, it's a problem, but give it a couple of years, and all those carcinogenic fossil fuels from Russia will not be needed anymore. It's just going to take a while. They might go to China, but even China's 20% of electric vehicles last year, vehicles were electric of new vehicle sales.
Mike, really quickly, 30 seconds though. What does this do to our global supply chains that we know that we're already strained at this point?
That's another area that's going to disrupt it, Carol. But what does that do when it boosts those prices and gives humans the reason, the incentive to fix it? They will. So supply chain's a different story from a raw commodity standpoint. Let's use U.S. natural gas. The price now on the screen is about the same as it was 20 years ago. Why? Because of technology can bring on tons of supply, and the more we can export to Europe, the better.
What's your buy today, real quickly?
Bitcoin.
Okay. You're great. You can go back to the beach now.
Yeah.
All right. Our Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence, on the phone from our Miami bureau. I'm feeling like the background goes away and it's the beach behind him.
Exactly. Smart.
All right. Carol Massar, Paul Sweeney. We are Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so we did see WTI crude go above 100 a barrel. I mean, this is one of the things that we've seen a lot of reaction to today here, Paul.
Yeah, just been the volatility in just financial markets in general, but particularly in crude oil, because clearly we're talking about a supply and demand scenario there, and supply, it might be a problem.
All right, we're going to talk about that with Dr. Ellen Wald in just a moment. Back to you, though, Charlie Pellet, with a look at the day.
Indeed, right now looking at mixed markets, Carol Masser, with the Dow lower by 226 points, down 0.7%, have been down 859 at the lows of the session. The S&P up 25 right now, up 0.6%. NASDAQ rallying 319, up by 2.5%. 10 years up 9/32, 10-year yield 1.95%. Spot gold down 0.8%, $18.94 the ounce. West Texas Intermediate crude now at $92.93 a barrel, up 0.9%. Brent at one point was trading above $105 a barrel. Barrel of Brent, the global benchmark right now, $99.02, up by 2.3%. While investor focus has been on commodities like gold and oil, Kona Hack, the head of commodities research at ED&F Man, says you cannot ignore the implications of Russia's invasion of Ukraine on agricultural commodities.
It's huge. Russia, together with Ukraine, they account for 29% of global wheat exports. So at a time when global wheat market is already pretty tight fundamentally, we can't really afford to see a big player come out of action. So supplies are tight, demand is inelastic, and the world does heavily rely on this region. Black Sea exports are absolutely critical for world supplies right now.
And again, we do have stocks trading mixed. S&P up 35, up 0.9%. West Texas Intermediate crude up 0.9%. Big move to both to the upside, and now just holding on to a gain of 86 cents, 92.96 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Charlie's, as he was mentioning, we had Brent crude at one point earlier today, over $105 a barrel. That really gets your attention, as Tom Keene would say, but it's backed off. We're now at $99 a barrel. So that is what we call volatility. Where do we take this energy picture going forward? We have one of our favorite energy experts with us right now, Dr. Ellen Wald, president of Transversal Consulting. She's also a senior fellow at the Atlantic Council and a Bloomberg opinion contributor, so she is quite busy. She joins us on the phone here from Jacksonville, Florida. So, Ellen, thank you so much for joining us here. What did you make of the intraday trading today?
Yeah, wow, lots of volatility. I mean, we saw WTI up at, just over 100, and now it's dropped, more than $7. We're back down in the low 90s. And I think that really reflected the fact that there was so much uncertainty over whether there were going to be sanctions, more sanctions, what those sanctions were. There was a lot of noise coming out from various officials, but nothing in terms of the clarity about what those sanctions could be. And I think there was definitely a lot of concern that they might actually affect the ability to import and also to purchase Russian energy exports. And so after President Biden's speech, where he clarified that that was not on the table, I think we saw oil prices really back down after that. Now, that doesn't mean that some of the sanctions that they're implementing or the activity in general isn't making it more difficult to buy Russian oil. In fact, we are hearing that there are some difficulties with purchasing Russian oil, but it did kind of take that level of uncertainty down a notch.
Ellen, you've studied the global energy markets. You've got a book called Saudi Inc. It's on the history of Aramco and Saudi Arabia. You also contribute to the Bloomberg opinion space. I do wonder what's happening as a result of the Russian invasion of Ukraine. Are new lines being drawn potentially in terms of energy alliance and the energy markets?
Yeah, this is a big question. Everyone's kind of wondering, well, where is Saudi Arabia in all of this? And they've basically stayed silent on the whole matter. The last we really heard was at an energy conference last week. We saw a lot of the Arab producers in OPEC basically saying, no, we don't think that we need to increase production. We're not looking to operate outside the bounds of our current agreement. And then you even had the UAE saying that a lot of the price increases due to this geopolitical tension and uncertainty in Ukraine, which is not something that they feel they can that they can impact with just increasing production. Now, OPEC is supposed to meet next week. OPEC Plus, actually, is supposed to meet next week on Wednesday to discuss what's going on in April. So that should be an interesting meeting because Russia is basically the most important component of the OPEC Plus group. It does seem that Saudi Arabia, at the very least, does not want to do anything to endanger its relationship with Russia, but I think all eyes will be on that meeting.
Ellen, just reading today some of the Bloomberg reporting that approximately 35 to 40% of Europe's natural gas comes from Russia. That doesn't sound like a very stable situation to me. Are there any solutions to try to reduce their dependence on Russia? Can the U.S. shale folks come up and do the LNG play? I mean, if I'm in Europe, how do I reduce my dependence?
At this point, there's nothing that can really be done in the short term. This is a problem, and this is an issue that has been a long time in the making. It's been known for several years, for many years, in fact. And even during the Trump administration, when Secretary Perry was the energy secretary, he actually made a very concerted effort to try to pitch American LNG to European countries, and made the pitch that they need to diversify their sources from Russia. The problem is Russian gas is cheap, and I guess they weren't really thinking about the geopolitical issues that come along with that. And yes, American LNG can go to Europe, but it's an expensive process. We still use a lot of natural gas at home, so it's not like we can just suddenly export all of it. And it takes time to build new terminals, get new contracts, but this is something that they should have known about. Yeah. And so there really is no quick fix here.
Ellen, I don't know, 5 years from now we look back at this, what are we going to be thinking about this situation when it comes to the energy markets? And just got about 25 seconds.
That's a really good question. I think we'll probably be seeing the wild swings and be thinking, wow, things were really volatile then, so much more volatile than they are now.
As we zip around in our EVs and we don't need oil, right? Maybe, I know, right? Ellen, you're a go-to for us on the energy markets, and we really appreciate it. Dr. Ellen Wald, she's president of Transversal Consulting, senior fellow at the Atlantic Council, a Bloomberg Opinion contributor, and we mentioned her book, Saudi Inc., joining us there from Florida. All right, back to World of National News, back to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Western allies expect Kyiv, the Ukraine capital, to fall within hours to Russian forces. Overnight, Russian President Vladimir Putin unleashed airstrikes on Ukrainian cities and military bases and sent troops and tanks into the country from multiple directions. Ukraine's President Volodymyr Zelensky addressed his people shortly after the fighting began and called out Putin. He speaks here through an interpreter.
He wants to destroy my country and our state, everything that we have built, everything we live for.
Zelensky has called on all Ukrainians to take up arms. Well, President Biden is moving to further punish Russia for its actions and has announced additional sanctions to stop Russian banks and state-owned companies from doing international business in dollars, pounds, euros, or yen, as well as personal sanctions aimed at Vladimir Putin's circle of billionaires. Bloomberg's Irv Chapman has more from Washington.
The president said the sanctions are aimed at inhibiting Russia's economic development, as well as Putin's plans to restore the empire.
No one expected the sanctions to prevent anything from happening. So this is going to take time, and we have to show resolve to see if we stay together, and we will. And so the people of Russia know what he's brought on them. The sanctions we imposed exceed anything that's ever been done. They are profound sanctions.
The The president said he's sending additional U.S. troops to Europe to deter Russia from threatening allied nations on its borders. In Washington, Irv Chapman, Bloomberg Radio.
The U.S. is expanding its restrictions on flights above Ukraine as well as above nearby nations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovik's off. Paul Sweeney is in the house with me. And Paul, one of the stories that caught our attention has to do with investors, Wall Street investors in particular, so here in the United States, and their view on Russian assets.
Yeah, it's interesting just looking at the MOEX, the index there, the Moscow Exchange.
You quote it every day, don't you?
Quote it every day. I didn't even know there was one until I read it in a Bloomberg story. Off 18% today, losing a huge part of the value. And you look under the BQ function for this MOEX equity go, and you get a market cap here of $215 billion. So it's not a big market per se, and you don't really have to quote it too often. But again, 52-week low today, off 38% year to date. So a real tough time for assets there, as I think a lot of investors just heading for the exits here.
Yeah, exactly. And that's exactly what our story talked about. Investors sitting on unwanted Russian assets, finding the exits pretty quickly. There's a quote in this story that's on the terminal. Charles Henry Monchow, he's a chief investment officer at Geneva-based Bank SIS, is it, I think, or SIS? Mm-hmm. They oversee about $28 billion. He says, we don't know if we can be banned for owning Russian assets. No one knows. You don't know what will be the extent of the sanctions. When you don't know, you just dump. This is really smart. Or just the thinking of uncertainty, right? How many times do we have conversations, whether it's the pandemic, whether it's what the Fed's going to do, whether it's, I don't know, pick your thing. When there's uncertainty, that's when investors kind of pull back.
Yep.
Somebody earlier, I think, talking, was it Peter Cheer about this, or somebody else, that's the thing. Where do investors go? They just are uncertain about kind of where to put money to work. There's opportunities out there, no doubt about it, but where do you do it?
I tell you, it's not in the ruble. The ruble touched a record low today. It's off more than 4% today. So people just, again, dropping that. Russian sovereign bonds also plummeted as well. So you take a look at some of the safe havens, the DXY index, the dollar, it's up 0.8% today. So that's where you see a typical safe haven trade. And that's certainly what we're seeing here today. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks erasing losses to trade higher, with investors finding refuge in large cap American tech shares as a decline in oil prices ease concern that Russia's invasion of Ukraine will result in an immediate worsening of the inflation picture. S&P up 47 points, just about the high of the day now, up by 1.1%. The S&P at one point was down 110 points. The Dow, which did turn positive very briefly a few minutes ago, now lower by 46 points, down 0.1%. The Dow, by the way, have been down 859 points, or 2.6%. NASDAQ now rallying 378 points. The NASDAQ Composite Index up 2.9%. The NASDAQ 100 Index up by 3%. And the Russell 2000 shifting direction, up now by 2.4%. 10-year up 7/32, 10-year yield 1.96%. Spot gold down $13 the ounce to $18.96, up by 0.7%. Crude, major story today. Brent crude, the global benchmark, had been trading above $105 a barrel. Right now it is at $99.10, up 2.3%. And West Texas Intermediate crude, $93.16 a barrel. WTI up now by 1.1%. Bottom line here, major reversal for the U.S. stock market. The Dow, the S&P, NASDAQ trading mixed right now, but the S&P up by 49 points, up 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. As the pandemic appears to recede across the U.S., the country's economic outlook is difficult to assess. But this uncertainty does not make prudent fiscal control any less necessary. The immediate problem is an excess of demand relative to available supply. This has caused inflation to surge, confronting the Federal Reserve with a delicate challenge: to tighten monetary policy without tipping the economy into a recession. Lawmakers should realize that new tax cuts or spending increases risk, adding to the problem. To be sure, a sudden severe tightening of fiscal policy would be unwise while recovery's prospects are still in doubt, but that doesn't mean policymakers can throw caution to the wind. Just the opposite. It has perhaps never been more important to spend taxpayer dollars cautiously. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10 minutes left in today's trading session, and we are climbing even higher on the equity markets, and we are at our best levels of the session, more than 3% higher, as you heard from Charlie, on that NASDAQ. Emerging markets, though, they have been bearing the brunt of investors' flight from risk assets after Russia staged that full-scale invasion of Ukraine. I was looking at, Paul, the emerging markets as measured by the MSCI, down around 4% today following that Russian invasion, and pretty much staying there.
Yeah, there's a lot of carnage there, and I think a lot of investors, and that's part of the market, have to rethink it, at least the near-term risk. Let's turn to a professional right now who does this stuff for a living, Yakov Arnapolin. He's Executive Vice President and Portfolio Manager for PIMCO. I've heard of them. They're pretty big. He joins us on the phone from New York City. Yakov, you've been in this game a while now. Give us your perspective on how the financial markets reacted today to a pretty stunning piece of news.
Yes, well, hi, Carol. Hi, Paul. Thanks for having me. Great to be on. Obviously, it's been quite a volatile day, quite an emotional day as well. I think I'll kick off by saying that certainly our thoughts and prayers are with the people of Ukraine, and we're very much hoping for a swift resolution to this crisis, although we have to recognize there is very limited visibility in terms of what exactly is going to happen. And when I think about it and when I look at the market reaction today and we assess, the spillover to other emerging markets, to the rest of Europe, to the U.S., it's been interesting to observe. There is a very common knee-jerk reaction. All of the emerging markets, whether you look at stocks or bonds or currencies, have come under a huge amount of pressure as people anticipate there will be outflows or there is kind of this, again, associated selling. I think in reality, the Russia and Ukraine are the epicenter, of today's events. If we look past that, there is, from a fundamental standpoint, right, there should not be much of a contagion to Nigeria, right, or Argentina and so on, and yet we've seen a commensurate amount of selling in those countries as kind of, again, a sort of knee-jerk reaction. So I think that will reverse with time, given the upward pressure on commodity prices. That actually is kind of net beneficial for the balance sheets of a lot of the commodity producers that form emerging markets. The very same countries I named, like Nigeria, for example. We've seen upward pressure on fertilizer prices recently, so places like Morocco can benefit. So I think will really come down to picking up, looking through the damage that has been incurred. Looking at some of the
right.
Weakness in bonds and bonds, equities, currencies, and there'll be quite a few interesting things as we parse through all of that.
Yaakov, I'm wondering in a market like today, I mean, certainly on the U.S. side of things, investors came in and thought, okay, there's some opportunities for me that we were getting maybe perhaps a bit oversold, at least in reaction to the geopolitical concerns, specifically when it comes to Russia and Ukraine. Were you doing any kind of buying or selling today?
We've been following this very closely. I think as we witnessed quite a rebound in U.S. markets, I think it comes down to the fact that, in many cases, geopolitical concerns create a very short-dated, very short-term threat to markets, and markets kind of look past that. And I think some of that has to do with the fact that realistically, Europe is far closer geographically, obviously, but also far more entangled from a trade standpoint, with the two countries, on the front pages. For the U.S., this is much more remote, both because trade has shrunk to almost nothing with Russia over the past year since the beginning of the conflict in 2014, whereas for Europe, it's still material. We're looking, I think it's something an average of $50 billion per year of trade with Russia. So this is much more impactful for European markets than for the U.S. So it's probably not surprising we saw people coming out to do some bond fishing today.
Forgive me, not being sassy, but is that a yes or no that you were doing some buying or selling?
Well, let's put it this way. We're starting to see quite a lot of, I would call it, not quite bargain basement, but very, very attractive valuations in places like Romania, in the periphery, in Eastern Europe, and some of the commodity producers I mentioned, places like Colombia, are starting to appear attractive as well. Because higher commodity prices and also how much people have sold for no apparent reason other than fear of contagion. So I think there's certainly interesting bonds and interesting offers on offer, interesting paper on offer out there right now.
Yaakov, do you think this event of today will spur central banks around the world to perhaps change the way they're thinking about this tightening cycle?
I think starting with the Fed, it seems unlikely. The reality is this could be quite inflationary, and we also heard President Biden talk today about the focus on tempering and taming inflation in the U.S. So, it's difficult to see the Fed changing its course of action. So we still anticipate that hiking will commence next month. I think for the ECB, it is it's certainly more. It's a bigger issue because of the linkages I mentioned, because of trade linkages, and then consequently the potential impact on growth in the Eurozone. So, I think there'll be a lot more for them to discuss and debate in terms of when they plan an exit from negative interest rates and what the pacing is going to be. And I think some of that, at the end, look, this is really the day one of the conflict, right? And it's going to come down to how long does it last and what's the damage.
All right, we got to run. Hey, Yakov, good to get some time with you and so relevant in terms of today's trade and news. Yakov Arnapolan, he is Executive VP, Portfolio Manager over at PIMCO, joining us on the phone from New York City. And we've got just a few minutes left in today's trading session, folks. But we are seeing stocks just off their best levels of this session, but up 1.5% on the S&P 500 and a gain of more than 3% on the NASDAQ. It is time to head over to our TV team for Beyond the Bell, our cross-platform coverage on radio and TV and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Kaylee Lyons in for Taylor Riggs, counting you down to the closing bell. Here to help take us beyond the bell, it's our global simulcast partners, Carol Masser, Paul Sweeney in for Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences on a day that has been both sad and, to a certain extent, amazing, Carol, to see the market reaction here coming out of the gate early this morning at 9:30 in deep bear market territory on the NASDAQ. And now, based on the pricing we're looking at right now, up 3.2%, one of the best days that we've seen on the NASDAQ going back to March of 2021.
Yeah, pick out some of those big technology names, whether it's Facebook. It's up 5%. It hit a 52-week low yesterday, up 5% today. Google's up 4%. Microsoft, Paul, is up about 5%. We are seeing investors move into those big tech names.
Yeah, I want to quote from a note I just got from Vince Signorella, Bloomberg's markets correspondent here. Many traders today are comparing this to the first Gulf War when risk-taking rallied back soon after the fighting began. So perhaps Street saying this might be short-term in duration.
It depends, of course, where sanctions go next. This has been a drip effect, and the turnaround, the risk reversal turnaround, all occurred after, of course, President Biden came out with further sanctions, but sanctions that many had worried would go even further, that would completely block Russia from access to the US dollar, to the yen, to the euro. And thus far, it doesn't feel as though the market was getting anywhere near that sort of anticipation.
Yeah, so maybe a sigh of relief, but it also is kind of the reverse when you look at some of the action in oil, Romaine, based on President Biden's comments around energy, around the idea that he will be looking for alternative supplies should there actually be any disruption in terms of energy flows out of Russia. He's trying to protect the American